Hi students, good evening again. Today we are going to discuss some of the concepts related to the fixed asset and also the fixed asset, how they are depreciated, what accounts are needed and what are the different accounting entries, and at the end how these fixed assets are shown in the balance sheet and the income statement. If you remember, in the last classes we have discussed about how the new fixed asset like a buildings, we have created like almost 10 accounts of the buildings and also for the accumulated depreciation. So we will continue for the same one, but there is a one more concept, that we have a concept of the accumulated depreciation, and it should be considered as the subheading or the sub account of the main fixed asset account. So first of all, what we have to do, we have to go where? We have to go on the bookkeeping, and in the bookkeeping what we are going to do, we are creating a one new account. So what we have to do, we have to create a new account, and the new account we are creating for the vehicle. So it is the fixed asset obviously, so we will go for the fixed asset and then we will here add the vehicles. So it is a vehicle account, so we are creating the simply a main account for the vehicles. So the vehicles with the 101. So this will be considered as the one main account under which all the vehicles will come. So we just have one option, save and close. Other option is that we save and the new. So we are going for the save and new option. So the first account is saved. So now we have again create the new account as a fixed asset. So the same type is the vehicle, but here the vehicle we are going that it is vehicle like car number 101 and the car is Toyota. So we are creating that one. So this is the one new thing that we are here we have to add. So it's a sub account. So we have to create that this car, Toyota car number 101 is the account of what? Is the account of the vehicle. So we have a one account already for the vehicle. So we will use vehicles account 101 which we have already created. So this is the fixed asset account, vehicles account. So we will add it as a vehicle account, but it will be a sub account of what? As the vehicle 101 fixed asset, because in the 101 there may be a car, there may be some different type of the trucks, there may be some tractors or some other vehicles are there. So different type of the buses may be there. So we are creating this car account 101. This is the first asset that we are going to enter, and it is under the vehicle account number 101. So all the categories of the vehicles will be under that one. So what we have to do, we have to just select that one, vehicle 101, and then we have to go forward, save and new. Now the next thing that we need, again we have to go to fixed asset, and then we need a accumulated depreciation for the property, plant and equipment, because as we know, as per the International Accounting Standard number 16, all the vehicles, all the property will be under the property, plant and equipment. So now the account of this one, accumulated depreciation. But accumulated depreciation for what? This will be accumulated depreciation for, we need say accumulated depreciation for vehicles. And for which vehicle? Obviously this is car for 101, which is what? Which is the Toyota car. So we are creating a new account of accumulated depreciation, and obviously this should be a sub account of what? It should be the sub account of the Toyota car or the vehicles account that we have already created. So Toyota car vehicle account, it is the sub account of the Toyota car, the vehicles account. So this is what? This is the new account we have created. The fixed asset, accumulated depreciation, and then the name is accumulated depreciation for the car, which is a Toyota car, and it is the sub account of the vehicle. Obviously it has a negative balance, which will be considered as the sub account of that vehicle 101 car account. So what we have to do, we have to just save and the close. So now the next thing what we have to do, we have to enter the cost of that asset. Obviously this cost of that asset will be there. So where we have to do, we have to go and we have to add in the new account, and in the new we will start with the journal entry. In the journal entry, the very important thing what we have to do, we have to look for the date. So let's say we start with the date and this is the journal entry number 1, 5, whatsoever is there. For example, we say this is the journal entry number 101 is there, or the journal number is there. So we have to enter the cost of the asset. So the cost of the asset, so we say it is the vehicle account. In which vehicle account? This is the car account we have to select here, and the debit, let's say it is the value of total $30,000 or the rupees or whatsoever is the amount there. So 30,000 is down, and then obviously it should be paid. How it should be paid? Let's say we pay through the cash and the equivalent, so or through the bank. So 30,000 is paid. So this is the first entry that we have done, that we have added a vehicle account with the number 101, which is the Toyota one, which is a car, and then it is paid through the cash or the bank. So what we have to do, we have to save and the close. After saving and close, we want to see that how this is shown in the balance sheet. So for this purpose, what we have to do, we have to go here in the business overview. In the business overview, obviously we have a different type of the reports are there, like an income statement is there, profit and loss, balance sheet, account receivable, aging summary. So the different statements are there. So we are going first one for the balance sheet. But here, very important thing what we have to do, we have to consider that the report period should be the custom. Custom means that we want to create an account, and we have created the account from 1st January 21 to what date? It was again till the 21, and it was up till December 31st. So we will record it as a December 31st. So if you see here, so we have the custom time period for the report, and then from 1st January 2021 to 31st December 2021, and then what we will do, we will simply run the report. So this is the balance sheet that we have. If you see here, we have a main account, the long-term asset account is there. In the assets, we have a category, the main category of the vehicles, and the vehicles we have a car, which is the Toyota 101, and then the total cost that is available is what? That is the 30,000. Okay, and the total long-term asset is also 30,000. So this is the first step, that we have entered the asset with the value 30,000. Now the next thing what we need, we have to go again where we have to see and we have to check that we are going for the new entry. Obviously, after using the asset for the whole 1 year, what we have to do, we have to look for the recording of the new entries. So we will go there on the new, and we will go for the journal entry of the depreciation. Again, very important thing, we have to look for the journal date. So it should be obviously at the end of the year, so it will be 31st December 2021. So we say this is the journal number 101-1, because the first one was 101, and this is the journal number 101-1 for the depreciation that we have. Then obviously we know what is the entry for the depreciation. We have a depreciation expenses debit, and accumulated depreciation will be credit. Now we have to see that we have a depreciation account or not. So if you see here, we don't have any specific depreciation account. So what we need, we have to create one new account of the depreciation. So what we need, we just look for the new account. So click on the new account, and here the account type will be what? Obviously that expense. It can be in the main expenses, it can be in the cost of sale, or it can be other expenses depending on the use of the vehicle. If the vehicle is used in the factory, it will be cost of sale. If it is in the admin or the marketing, so it will be in the expenses. So we just select as the expenses. Then again in the expenses, we have a different type of the expenses are there, like we have a different amortization, we have a bad debts, bank charges. So different type of the expenses are there. So these are the expenses what we have to do. So we just say that, for example, it is the expense which is related to the travel expenses or other selling expenses, or it may be office and general expenses. Why? Because this car may be used by some administrative staff. Now here we have to write the name of the account, like a depreciation expense. I just correct the spelling. Depreciation expense is there, and this expense is for what? This is for the car, which is 101, and the name of the car is Toyota. So we have to give the complete name of that one, and we don't have to give any like a sub account or something. Like simply we have to go and close that one. So we are just have to correct some of the spellings here. So save and close. So now we have this account, depreciation expense 101. For example, the total value or the total cost of that it is what 30,000, and let's say we depreciate it for the 5 years. So the depreciation on the straight line method will be 6,000 rupees. So we just debit with the 6,000. So the total amount of the depreciation, let us say it is 6,000. So the depreciation expense car 101 Toyota is debit, and what will be the credit? It will obviously be the accumulated depreciation. So accumulated depreciation, again, which depreciation? Obviously we have to see that the depreciation for the building or for the machine. No, it is the depreciation for what? It is for the accumulated depreciation car, which is the Toyota, which is again the sub account of the car. Obviously we have to see that which account is related to which specific account or sub account. So we are selecting that one. The 6,000 is there, and then we save and the close. So depreciation is debit, vehicle account, Toyota vehicle account, depreciation account, accumulated depreciation account is credit. So we just save and close that one. Now the one new entry is saved. Again, what we have to do, we have to see that what is the result of that entry, how it is shown in the statement of financial position or the balance sheet. So we go here in the business overview, we go forward for the standard report, the balance sheet, and in the balance sheet, obviously again what we have to do, we have to look forward, we have to look for the custom period, like a report should be the custom period. So it should be from 1st January 2021 to again 31st December 2021. So we will select here the exact date that it should be until the 31st December of 2021. So 31st December 2021. So this is very important. The report period should be custom, and we have given the date from 1st January 2021 to 31st December 2021. And then we have to look for the running the report. If we run the report, if you see here, last time the car was there, the value was 30,000, but now this car is 30,000 with accumulated depreciation of 6,000, and the net book value of that car in the vehicle account is shown as the 24,000. So just ignore why the total assets are 6,000, because we have paid through the cash and there was no cash available. Just it was a demo account created, the first transaction in the account, and there was no balance in the cash. So that's why it is showing like 6,000. The main thing is that we have created account Toyota car account, and total value is 30,000, which is the part of the depreciation, and the depreciation is 6,000, and the net amount of that account is 24,000, or the net book value of that Toyota is 24,000 in the statement of financial position. So if we just look at that one, so even we can see that how this 24,000 is there. If you see here, all the transactions are there. It was 30,000 debit was there, and the journal entry number 101-1 was there for the depreciation. So all the information is there. It was purchased in the cost value was what? It was the journal entry is there 101, and then the journal entry on 31st December is there, and the net book value now we have the 24,000. So I hope you have understood the concept. This is the main thing, how the books of account are entered, the asset, and also how in the fixed asset depreciation or the accumulated depreciation is entered. We can also schedule the accumulated depreciation or depreciation for the year. So in the next lecture we will do that. Instead of doing it manually or through the journal entries, if we schedule it, how we will do it. I hope you have understood it. And if you have any doubt, if you have any question, you can ask me in the next. Still, if you have any doubt, if you have any question, you can ask me in the comment section. Thank you.